you still have a lot of people working from home. They're even more reliant on tech right now. So it has been winner takes all. The valuations do appear extended in some markets. But I don't think you're going to see a change in that trend, that it's going to be driven by quality defensive growth sectors going forward. We also saw a recovery in value, though, but I think it's still one where the U.S. is going to outperform other international markets. We still see that tech and winner takes all is probably a trend that dominates, because that will be supported by the macro data that's coming out. So I wouldn't diverge away from what we have seen. I mean, all in total, as we look to early 2021, we still think you could see another 10 to 15% on the equity market as we go into the first quarter of next year.
Wow, that's interesting. Joyce, good morning. Tanveer joining in this conversation. J.P. Morgan forecasts a contraction of 40% for Q2. This was, I think, an estimate that they put out in early April. Do you think that as you look back and reassess the performance of the quarter from an economic standpoint, that May and June would make things look a lot less bad for Q2?
Well, we definitely saw the bottom, back in April and in early May. So the rebound period, I mean, look, when you turn everything down and turn it back up, the numbers are going to look eye-popping on the way down and eye-popping on the way up. So, the second quarter of the year, we were down 35%. So we've made some revisions, but we're still looking at a global contraction that's going to be 4% this year. And we're still looking at GDP growth compared to the pre-pandemic level being 4.5% lower at the end of the year, unemployment at 10%. So these are still, very serious numbers, with respect to the severity of this crisis. But what you have is a quarter where, as we see the numbers come back, that momentum, at least for the next month or two, I think remains intact.
And from your notes, I gather that it seems like you believe there's more upside surprise in emerging markets versus developed markets, particularly the U.S. Is that right?
Well, we were seeing the upside surprises actually in China. China was first in and first out. So we see China's growth at 2% this year. I mean, there's really only two countries where we even have positive growth. That's China and Indonesia. So you have that China has, done better than expected. And the PMI numbers that came out today basically, supported that. You've also had that the recovery in oil prices is helping the commodity producers as well. I still think the U.S. outperforms here, but everybody's basically saying, look, the very worst case scenarios that we were thinking could play out, those haven't materialized. Now, we still have very stubborn first waves or second waves that are occurring. So there are still risks that are out there, but that's not going to change the fact that the macro data is going to continue to look, I think, quite supportive for at least the next month or two.